have Anubhuti Sahay, the head of India Economics Research at Standard Chartered Bank, joining us on the show. Anubhuti, hi, thanks so much for joining us. Give us your first sense of what you are making of the IIP numbers right off the bat, because we were estimating a 1% uptick. We've seen much more than that, a 2.7% growth. So give us a sense of what you think has led to this beat on estimates and your take on the numbers.
Yeah, the numbers are definitely much better than expected. We were looking at under 1% growth, and this clearly is on the higher side. If we go by sector basis, obviously the big positive surprise has come from the manufacturing sector. We grew at 3.4%. Here again, we were looking at a growth of closer to 1%. We need to look which industry group, out of the sub-industries which IIP provides. We need to see where the big positive surprise has come from. But if we look at it on the other segregation basis, I think the most important surprise has come from capital goods, which has grown at like a 20%. It's one of the heftiest increase which we have seen, at least for full of like FY 25, and that is probably one of the most important reasons why we saw this IP number doing so good. Even if we look at the consumer durables number, we thought there would be a little bit of a softening. It has maintained its pace as the month of March. So I think these are the two more important segments which have thrown the positive surprise, and with the growth in capital goods being the most important contributor here for the positive surprise on the IIP. Having said that, while this number is better than expected, I think we need to remember the bigger picture. It is still in low single digits of like 2.4%. Fiscal year 25 was at 4%. And going forward, it's possible that in the first quarter, we might not see too much of a strong number. So this will weigh down on industrial GDP, though the EBITDA margins, because of lower commodity prices, might turn out to be a support.
That's a take right off the bat on the IIP numbers. Or Anubhuti, like you mentioned, surprises coming in from manufacturing, surprise coming in from consumer durables as well. But I want to ask you about what we're seeing on the industrial goods side, the infra good, pardon me, because that output growth has come in at just 4% compared to 8.5% on a year-on-year basis. So that's almost half. Is this still in line or ahead of the estimates, or do you believe that this is some softening and this is the trend that we need to be watching out for?
I think like the infra side, there was a expectation of some softening in the number. There is a base effect which is at play, and as I highlighted, while consumer goods, etc., consumer durable is one positive, the biggest surprise has come from capital goods. So I think there is a lot of with a 20% kind of a growth on the capital goods. That is definitely a positive underlying from this IIP number.
Anubhuti, we'll let you go. Thanks so much for joining us. Appreciate you joining us as soon as the numbers are out and giving us your first take on that.